friends, and thanks for joining me again. And today I want to talk to you about multiple bank accounts. Do we have multiple bank accounts? Should we have multiple bank accounts? Honestly, I think there are 5 main accounts that we need in order to be most financially successful. So let me break that down for you, not only on what the types of accounts are and what they're for, but how that actually looks in our life. The first account would be just some petty cash. I think businesses do this a lot for a reason, because there are little things that come up. And so I really feel like this is a pretty good thing for us to just kind of do on our own as well. So this is money that we've gotten from, babysitting or selling things or just different sources like that, just little bits of cash that we've gotten around. And this is money that we will use for, just small amounts of spending, little things that come up, buying things on Craigslist or a Facebook group or something else like that. Garage sailing if we decide to do some of that in the summertime. Eating out even, which we rarely do. We did exactly 3 times last year. So yeah, if we do, we usually do that with this sort of petty cash. I do think it's important to have just a little bit of cash on hand for these sorts of smaller things that come along. The second account would be a fund account. A lot of the Dave Ramsey followers call this a sinking fund, but I just call it a fund. So if we have something specific that we're saving for, we put it in this fund. So say you had a renovation you wanted to do, it would be a remodeling the kitchen fund, or say you wanted a new couch, it could be a couch fund. Oh, and then you can also have multiples of these. This doesn't have to be just one fund account, it can be 1 or 10, or even 0 if you have nothing that you're actively saving for. Whatever the purpose of this is, it's important to note that this is not savings, it's planned spending, which is not the same as saving. You're planning to spend this money, and so it doesn't really count as, for saving it other purposes. So for us, what this looks like is the account that I have that I make a little bit of money, I've talked about this before, on YouTube, and so we have a separate checking account, although for a long time I used it as a savings account, but we have a separate checking account where all of the money that I made from that went in there. I know all of sounds like a lot, but no, I make dribs and drabs on YouTube. But when you don't touch it for many years, it can actually grow into something substantial. So what we did is we have that separate account, all of the money goes into that, and then what I was saving it for was a new greenhouse. Even before we bought our new house, when we had our old house, we had a greenhouse on it. We were saving for a greenhouse for the new house. And so that YouTube account has actually paid for our greenhouse that we have now. We were able to do it with no debt. So we were able to save ahead and then pay for it all in money as we were putting that together and building it. So that is account number 2 that I recommend people have, is a fund account for anything that you are saving for. The third account would be our general checking account, and this thing is the main thing that we have. My husband's paychecks go into this account, our rental income comes into this account, and then we use it for everything. All of our bills, all of our food, our non-food, our gas, pet food, gifts, oil changes, car repairs, for our cars, everything. I know this might sound confusing to have so many things covering from one account, but it really isn't. So if you want to check out my budgeting video, I kind of break it down to where I know how much we're supposed to spend on each particular thing, and so it's not super overwhelming. But this is the third account that I recommend having, is a general, checking account that you use for mainly all of your everyday kind of expenses. The fourth account would be an irregular bill account. I honestly think this is very important, especially if you have any kind of bigger or irregular bills to pay. So for us, we have property taxes we're supposed to pay. We obviously have homeowners insurance we're supposed to pay. We have car insurance, just any kind of bigger bill. So instead of going along in life and spending all the money we make and then have a big bill come up and have it be like, whoa, now we have this $1,200 bill we're supposed to come up with. What if we didn't have the money for that? So it's basically the same thing that mortgage companies do when they're setting up an escrow account. So as you're paying your mortgage, they take a portion of that money from your mortgage and put it into your escrow account. That way when your property taxes come up, they can pay for those property taxes, or your homeowner's insurance come up, they can pay for that. It's basically the same thing that they do, except we're doing this for ourselves. It's our own little escrow account, so to speak. So when you have a bigger bill come up, you're setting aside the money each paycheck until the time when that bill comes up, and then you have that money. Let me break that down for you. Let's say you had several bigger bills, and just to make the math easier, let's say you get paid every other week and it's 26 paychecks a year and you need $2,600. Again, just to make the math really simple. Let's say your homeowner's insurance, your car insurance, and then your property taxes and whatever equal that amount. Well, then you would just take $100 a week, or excuse me, every paycheck out of your paycheck and then put it into that other account. And then when the bills come up, that money will be there to cover it. That way you don't have all that stress of trying to come up with these big or irregular bills out of nowhere. Honestly, if anyone out there has any bigger bills, I highly recommend taking this method. Add up the total amount of all of your bigger bills, add a little bit because they do tend to go up from year to year, so maybe add 5 or 10%, and then cut that, divide that by the amount of paychecks you have a year, and then take that total amount out of your paycheck and put it into this separate account, this home or self escrow account. That way you have the money for the bills when the time comes. Sometimes you do have to put a little extra money in there to get it started, because if the bill is coming up in a month, you may not have all of the money saved up ahead. So, a good time to do that would be tax return season, which is coming up really soon, to just, put a little in there to get that escrow account started. That way when the bills come up, you can, keep it continuing from there. So that is the fourth account that we highly recommend having. And then the fifth account is a savings account. And this is a true savings account. This is not planned spending. This is true like emergency savings. And this is going to be for any of those unexpected things that come up. Car repairs aren't always unexpected. It's expected that we're going to have to fix our car. So saving some money aside for car repairs is pretty important. Oil changes, that is not a emergency. That's regular maintenance on our car. We should be able to put that into our budgets. Even doctor bills, for the most part. A lot of things in life we kind of know are going to come up. Christmas comes every year at the same time, or other holidays you may celebrate. So it's really important to have those sorts of things covered from our regular budget, but it's also important to have some money set aside. I've talked about this in a previous video, for when the unexpected comes up. Say you had a tree that got struck by lightning and then it fell on your house, or you get into a major car accident, something that isn't something that you expect having happen, or a job layoff. This is money that is good to put into an account and then leave it there until you need it. Now, it doesn't have to be a separate account. I know a lot of people who do it one of two ways. Some people like to have it in a separate account, and they like to have it harder to get to so that they don't have the temptation of spending it. If you know that you're the type that's tempted easily, you may want to put it into a separate account that's harder to get to. If you know that you won't dip into this kind of money, sometimes people like to have this money just in their regular checking account, but then use that amount as their zero. Let me use this as an example. My grandpa liked to have a little bit of money set aside in his regular checking account for when things came up. His dollar amount was $5,000. He had a couple of rentals that he was taking care of, and he knew that there were unexpected things that could come up that he needed quick access to the money for. So he liked to just have a checking account, and say he had, $6,000 or $7,000 in that checking account. Well, only $2,000, $1,000 or $2,000 of that was money that he was supposed to be spending throughout that month. That $5,000 was his emergency fund that he was trying to keep in place. Hopefully this makes sense. I know a lot of people will ask, well, isn't it expensive to have a lot of bank accounts? And honestly, if you bank with a bank that charges you to have accounts, you are banking in the wrong place. A lot of banks, or even credit unions, which honestly I think is even a little bit better of a choice, pay you to open different accounts. So if you have the option, I would highly recommend doing that. Some banks will pay you like $50 to open a separate account. So yeah, it may actually be a good idea to open the separate accounts and then get the money that they're offering as perks for those separate accounts. So definitely I highly recommend finding either somewhere where you can bank for free, or at least for free, if not a bank or credit union that will offer you some sort of perk to be able to do this. So there you go, friends. Those are the 5 accounts that I highly recommend: some petty cash, a fund account or many, one or many, your general account, your irregular bill account, and then your emergency savings account. And with these separate accounts, being able to put the money into each as we need to, we will have everything covered. We'll be able to save ahead money for those larger purchases that we would like to make. We'll have all of our bills covered without it being a major, issue. And when we have emergencies come up, we'll have the ability to cover them. So there you go, friends. Hopefully this video was helpful to you on my take as to whether or not we should have multiple accounts. I definitely think we should, and those are the 5 at least that we should have. Hopefully this video was helpful to you, and for Green Girl, and we will see you next time.